Hey guys, Stock Saturday, and it's been a somewhat slow week, I suppose. I'm up 1.2% compared to sort of the markets. Not too bad. It's about £5,000, but I have made a sale of Process, the last of the Process. Sort of thesis basically was looking at 10 cent, sort of looking a little bit pricey for me, sort of still considering it's a Chinese stock. I don't think sort of earnings multiples of where it is um, are particularly good value from here, and yeah, I don't really want anything else in the process portfolio, to be honest, as much as there's some nice emerging market stuff in there. It's not really sort of something I wanted to hold. I don't mind holding the emerging markets ETF, but yeah, sort of a load of that in process just wasn't really something I wanted to hold. I think there's better places for that money. But yeah, so about 1.2%. The S&P is up 0.94%, and Nasdaq is up 1.93%. So I'm sort of in the middle, on the lower end of the middle of those two. So not too bad. We've had some sort of choppy moves this week. Himax sort of losing me a little bit. Broadcom sort of has been very choppy. TSMC down a little. Vanguard emerging markets does sort of just keep to be trickling up. Some of the Chinese markets sort of doing pretty well. Stellantis sort of going nowhere until the earnings come out. Kind of expecting that to be quite bad, and sort of considering whether I want to be holding this too much longer. Obviously, we've got an awful lot of Chinese competition now. Sort of in company near me, sort of buying a load of Chinese BYD cars. So yeah, maybe we're not going to do the tariffs, and we are going to get flooded with sort of a load of Chinese competition. But yeah, we'll see. BlackRock down below 1,000, and we sort of had some fairly rough earnings. Ingredion has dropped on the earnings. Doesn't look too bad. I'll come back to them possibly next week. But we did have FMC, which I will come to in a bit, drop about 35% on their earnings, which was a hell of a move. So yeah, I'm down sort of 32% on that position now. I will come back to my thoughts on that. But first, I suppose we have a look at the crypto miners, as it's sort of that time of the month. We did get CleanSpark's for well, they call it first quarter results, Q4 2024 results, I would call that. And yeah, a lot of the balance sheet numbers, as I always say, are fairly out of date, but you can look at sort of the revenue numbers. Well, I mean, you can look at things like property, plant, and equipment is obviously up as they've been building more. Deposits on miners and mining equipment is down since they've been taking delivery and building things out. Goodwill, sort of as their acquisitions were sort of going through and realizing some of that purchase. Loans payable, of course. This is the I believe convertible debt. So the theory is if the price goes up, that debt goes away and you get more dilution. So potentially a little bit of a headwind for price, but hopefully not a debt problem. Looks like they are closing in on sort of 300 million shares, so that is quite a lot. And yeah, about the income statement wise, doesn't look particularly good even now. We're sort of talking November after the election, sort of high prices all of November, all of December, and yeah, it's still not looking sort of particularly good. 162 million net revenue, and they'll sort of say that's up over 100%. Yeah, great. Cost of revenue is up, far more than double. Professional fees up a little, payroll expenses not up quite so much. So you could say there's a little bit of economies of scale here. Maybe the same people managing more assets. General administrative has doubled, and then of course gain on the fair value of Bitcoin is doing sort of most of the heavy lifting to create a large number, and then sort of talking about EPS growth and everything. It's all off the back of this. If you took that credit out, if you like, from the costs and expenses bit, then you would have a net income from operations loss before you even have tax and interest expense, interest income, and that sort of thing. So yeah, wouldn't even be a net profit even with sort of $90,000 to $100,000 Bitcoin for quite a while. So I do still maintain this is sort of not something I would want to be holding. I'll hold it a bit longer if we get sort of bullish move in Bitcoin. I'm sure they'll rise, sort of leverage to that. But yeah, I would be sort of looking to sell probably on any sort of reasonable pumps. But yeah, so they are calling this 241 million of net income, and they even do an adjusted EBITDA. So you would think adjusted EBITDA probably should be or adjusted net profit even should be removing that gain on the value of Bitcoin, which they don't. They do remove the depreciation and amortization, of course, remove share-based compensation, unrealized losses of securities, interest and all that, income tax. So yeah, quite a lot of their expenses still have that gain on Bitcoin. And then yeah, non-GAAP adjusted EBITDA, which I think you could otherwise call bullshit, is 321 million. So that's the number that they sort of put out there, and the stock sort of gained about 20% on that news, and then dropped back, I think, as people digested that this is fluffing up the numbers, I would say. So what I would say is probably more important is the January mining update, what is happening right now, and sort of essentially fundamentals going forward. So January they mined 626 Bitcoin, admittedly a very good number. They now hold 10,566. They have gone up from selling sort of 2.5 a month to about 22 a month. So no real problem there. I wouldn't be sort of all that bothered if they were to sell quite a bit more and show some sort of more real profits. But yeah, they're sort of building quite a stockpile now, I suppose. Month end hash rate at 40.1, so yeah, they've surpassed 40 exahash. That is pretty good, and efficiency of 16.15. So yeah, that is very good. And some of the other sites are still pushing on. Twin City, Georgia, it's a very small site, a 12 megawatt site, approximately contributing 0.7 exahash. So yeah, quite small. The remaining 0.1 exahash is expected to come online in the coming weeks. So adding 0.1 to 40 isn't going to move the needle, of course. And then the Wyoming site, actively deploying our advanced immersion miners, on track for completion this quarter, and that's expected to contribute 5 exahash with S21 XPs. So that's a decent addition. So CleanSpark still looking the most efficient, and the one of mine at least most focused on mining. Then of course we have Riot, who are not focused on mining, of course, or certainly not compared to CleanSpark. Numbers still look fairly poor, fairly sluggish. They produced 527 Bitcoin in January, and they hold 18,221 after, of course, selling none of it. But hash rate is really not going up. Rockdale deployed has stayed the same, but we were sort of hoping operating hash rate would have gone up. It's gone up from 12.1 to 12.7, still sort of sluggishly getting towards that operating hash rate, replacing the broken ones. And yeah, Corsicana up from 14.1 to 15.7, operating sort of up a similar amount. and Kentucky sort of slowly pushing forward, 2.8 with 2.4 operating. So yeah, operating hash rate or average operating hash rate up from 27.4 to 29.3. So I guess they're at about 31 now. A little bit more in power credits, 3.6 million in total power credits for the month. And so yeah, the all-in power cost reduced by 0.3 cents. That's sort of kind of a help, but yeah, fleet efficiency at 21.1, where CleanSparks were at 16.15. So they used to be sort of the most efficient, highest profit miner, or sort of on a cost basis at least. That was always what they used to report, and yeah, they'll be sort of dragging back down from that now. They're still looking into the AI HPC process for the remaining 600 megawatts of power capacity. So, yeah, they've got a third-party consultant looking at that, and the chart doesn't look any better. As we sort of noted, CleanSpark have just crossed 40 exahash, and Riot are projecting 38.4 by the end of the year. So another 11 months to go, and they'll still be behind where CleanSpark are now, which I've mentioned a few times, but I still think that's fairly notable when they were sort of projecting enormous, great big numbers before. And then Hive Digital. So sort of a little bit happier about Hive now. They produced 102 Bitcoin, which obviously isn't very much at all. But yeah, bringing their HODL portfolio to 2,657. But they note that month over month this has declined as Hive strategically sold a portion of its Bitcoin to fund part of the Bitfarms 200 megawatt site that they've acquired. So yeah, holding 2,657 and having paid for some of that site. Obviously, there's a lot more payments to go, but yeah, I think that's quite good. Not sort of diluting and not taking on debt to acquire this site, and it sort of brings them to a decent target now of sort of 25 exahash by September this year. That's the only part that is quite poor, but they're saying sort of by the middle of the year they should be at a decent amount. But yeah, they still are at 22 joules per terahash, so slightly worse than Riot, admittedly. But yeah, that's due to go down after these expansions. Yeah, they're looking to get to 16.5 sort of by full deployment of this, so by about September. But I would hope that I'm going to be largely out of all the miners, sort of certainly by the end of the year, I would say, but possibly even by September. But yeah, we'll see. No mention of the AI side, sort of annualized revenue. They were originally projecting that to be getting towards like 100 million a year. I think last earnings they were at about 12 annualized, not, they hadn't done 12 in the last year. It was 3 million or something, and annualize that and you get to 12 million a year, but no mention of that, so that's a little bit unfortunate. But I do still think they could look strong if they're paying for this acquisition. Basically everything's done now to get to 25, and this 2,600 Bitcoin still covers I think over 2/3 of the market cap. So I think they look quite good. So FMC, what was so bad about FMC? I've obviously bought at a fairly poor time. The presentation obviously tries to paper over this a little bit more than the earnings, but yeah, they sort of give you this Q4 results, and there's sort of no real getting away from that. I don't think people are sort of focusing on this gap net income a little bit too much. They have sort of noted that this large drop is a sort of it is a cash adjustment, it's a tax adjustment, but basically last year's tax was sort of a large refund in their favour, and it sort of pushed net income up enormously to over $1 billion. If you have 1.1 billion of revenue and almost 1.1 billion of net income, not quite sure why that isn't sort of flagging up for people as a bit of an anomaly. So this year they've had an adjustment to that, and they're saying basically the whole thing was very much in their favour, and that you should focus a little bit more on adjusted and adjust these numbers, and look forward to where they're going to be, going forward, and ignore that net income number. But people who don't sort of look into them just see, oh, a negative, that's not good at all, and stocks sell off. It's not all because of that, of course. It's a lot of it is the guidance, which is a little bit further down. But yeah, sort of regional wise, didn't think it looked too bad. 10% year-on-year revenue growth in Asia, 18% in Europe, Middle East, and minus 10% in Latin America, which is one of their biggest section, and 23% growth in North America. So I don't think that was too bad. They give you the excluding FX numbers, which I would say probably don't focus on all that much. Adjusted EBITDA drivers. They're sort of putting FX into that, and it's partly costs has sort of increased this EBITDA quite a bit. Yeah, they've been able to lower costs and had sort of a little bit of restructuring, cost cutting. I think a lot of companies have been doing that. Lower prices in Asia, so yeah, a little bit more sort of competition, and they've had to lower prices slightly. If you look at the full 2024 results, they're sort of shown adjusted earnings per share at sort of $3.48 compared to $3.78, so it's down 8%. And yeah, the net income numbers, as I say, looked a little bit ridiculous. I saw sort of a couple of videos recently sort of saying that they look amazing value because they're at about 3 price to earnings, 3 or 4 or something, and they were just taking this last year's net income number with the huge tax adjustment and not sort of adjusting for that at all, not even looking just at a forward PE, which would have got rid of that adjustment. So yeah, I think you have to look a little bit more into that. But yeah, this is what sort of has driven quite a large amount of the decline, I think. They're sort of forecasting revenue about where they are this year, 4.25 billion, and they're sort of focusing a midpoint about 4.25 billion, so flat year on year revenue at least. Adjusted EBITDA similar, I guess, 903 million for this year, and yeah, sort of midpoint being what, 910 million, so 1% up year on year. But adjusted earnings per share for next year sort of flat as well, and they were sort of forecasting, I think, $4.30, $4.40 before. So yeah, sort of to be about $3.48 is admittedly 20%, maybe a little bit more than 20% lower. So yeah, the stock sort of comes down, admittedly quite an overreaction, about 35%, but people are still a little bit sort of nervous about why these earnings are dropping. There's still a little bit of concern about the balance sheet as well. They don't exactly have sort of the most cash. You're looking at about 350 million in cash here compared to sort of 3.3 billion in debt. But yeah, gross debt has dropped 600 million this year, so that's quite a nice sort of reduction. Brought net debt to EBITDA down from 3.7 to 3.3. There's an awful lot of companies that are a lot higher than that, so it's not the worst thing, but they're not exactly earning massive profit to be sort of paying this off. And yeah, people are sort of very concerned about patents, essentially. Yeah, they're sort of looking at accessing new markets, I think partly because they're a little bit like a pharmaceutical company, essentially. They've got patents on the chemicals that they produce, and those patents expire, and then basically everyone is allowed to sort of distill their secret sauce and copy it and make, generic products. So they wouldn't be able to charge what they're allowed to charge currently, so they constantly have to be expanding into new markets and creating new products and patenting them. So they're always looking at, treating for all manner of little bugs and beasties. I'm sure the sort of green types will say we should be doing that humanely rather than sort of, probably killing quite a lot of them. But yeah, that's unfortunate. And they're saying that they have, quite an active pipeline of new products in insecticides and herbicides, but people are sort of concerned over this pipeline. I guess the more I look at them, the more they do seem like a pharmaceutical company, which I've never really wanted to get involved in, but. Yeah, I kind of like this area a little bit more than certainly a little bit more than pharma, but yeah, they give sort of 2027 financial targets, which I never like to focus on too much because an awful lot can change. Certainly in 2 or 3 years, as opposed to looking at this year's forecasts. Yeah, there wasn't a huge amount more in the earnings release itself. It was largely sort of the same numbers in the presentation, in text form. They don't sort of wouldn't say they really try and gloss over the bad numbers in here. They're sort of pretty much there for all to see. Find a lot of companies' presentations are sort of focusing a little bit too much on the positives when there are sort of clear negatives, and you have to dig into the earnings releases. Obviously, the presentations are a little bit more video friendly, a little bit more easier on the eye, but it's always good to read both. So, yeah, it's a drop, but it's not something that I'm sort of diving into, buying the dip straight away, because this is a significant drop on significant fundamental drop. We've got sort of 25% maybe reduction in earnings growth or earnings for this coming year, depending on sort of analysts' estimates. So yeah, it's a 35% drop on 25% earnings drop, and sort of concerns about the pipeline of products. So yeah, a lot of people, will just sort of say, well, you bought them at whatever it was, 50, and it's now at 35. So if you're happy to buy them at 50, you buy them at 35. But I don't think it's quite that simple. I think I mentioned when I originally bought them, based on the earnings, they were looking at about sort of forward PE of about 11, and I think based on these numbers, they are sort of still looking about 9 or 10, maybe 11. So, it hasn't become enormously good value as a result of this 35% drop. It's just a slightly lower forward PE. So if you're buying them, you're expecting that those earnings to sort of go up, either this to be wrong or the earnings to go up sort of drastically in 2026-7 time. So yeah, I'm not sure I have that confidence to do that. So really, even after a 35% drop, I potentially see better buys elsewhere. So I'll leave it where it is for now, and sort of maybe if more money comes into the stock portfolio, then I might add to it. But for now, I'll probably leave it. So economic news, we didn't get sort of all that much this week. Had CPI figures from the EU, slightly higher than expected, but it's in the sort of 2.5 to 2.7% range, 2.7 on core. I think they're sort of relatively happy with that, to be honest. Yeah, we had Tuesday, not very much. JOLTS job openings, people sort of get worked up about, but I don't think there's all that much there. The ISM non-manufacturing PMI I always focus on, a sort of good bellwether for the US economy. 52.8, was expected at 54.2, down from 54 last month, slightly revised down, but yeah, it's above 50. And it's Raoul Pal, who I sort of follow, says positive, but not that positive is kind of optimal, really, because it generally means people will still be sort of slightly concerned, and there'll be sort of money printing and government fiscal programs and that sort of thing, to try and sort of juice this number a little bit more, basically. So that can be sort of positive for stocks, crypto, gold, everything. So yeah, if this was sort of 55, 60, they would just kind of let things run, and it sort of soaks up a lot of money that might otherwise go into things like crypto and gold. So yeah, was relatively happy with that. The GDP now thing, which just goes a little bit mental from times to time, was sort of expected to be 3.9%, and it was 2.9 for this quarter. Obviously, we're only a third of the way into this quarter, so I don't think that's the most sensible thing to follow. Although I do, keep an eye on it all the time, but it updates every day. Bank of England voted for the 0.25% cut as expected. 9 to 0. I think a couple of people voted for 0.5%. So yeah, they're in cutting mode, certainly. Jobless numbers looked ever so slightly worse than expected, but nothing really in that. And then you had non-farm payrolls and the unemployment rate. So that was sort of a bit of a mixed bag. Non-farm payrolls a little bit worse than expected. Last month's was revised up from 256,000 to 307. So this month's figure being slightly lower, is offset by that. And average hourly earnings was up. It was flat from last month. Was expected to be down, and last month's revised up. And unemployment rate dropped to 4% dead from 4.1. So this was at 4.3, 4.2 sort of a couple of months ago, I think, 4.3%. The sort of bears are saying, well, it's going to 6. It's going to 6%, sort of confidently saying that as if it's baked in at this point, a dead cert, and it's still coming down, and we're getting our way into 2025. So yeah, that's not happening. And that was about it for the news. So the ISA wise, nothing sort of really going anywhere. CleanSpark and Riot sort of hovering around the same point. I think CleanSpark and Riot sort of up a little bit for the week off the back of these earnings coming out, but they're nothing special, as I would say. They haven't earned 324 million in EBITDA. Kua Mining and Equinox Gold sort of picking up a little bit. Sort of got gold smashing through all-time highs every week, sort of touching $2,900, I think, on the futures, and sort of Fresnillo back in the green for me, looking pretty good. Smaller sort of positions, not exactly doing a huge amount. American Tower, I think, up slightly. Vici sort of back above 30, sorry, but yeah, not too much happening there. On the Interactive Brokers side, things sort of looking up a reasonable amount. Pan American sort of 24.55. That's pretty good. Back in the green. That's not been green for a long, long while. So yeah, we're looking pretty good there. And KGHM sort of pushing up. I think copper went up about 13 cents yesterday. So pretty strong move. And the investor count, I don't think has moved at all, although we have had some fairly sort of volatile movers in here. Riot sort of down quite a bit. It's down 15% now. Sort of uncertainties. I think, the bulk of my position in here is $35 Riot options. And, just see they're at $11 and we're already February. So $35 before the end of the year is looking a lot less likely, but I think we get a decent sort of crypto move in the next couple of months. That'll start to pick back up, I'm sure. Hive, I've been sort of buying a little bit more. Hive is the only thing I bought this week. Not a huge amount. I think I spent about £1,000. Equinox is the one that has sort of, stemmed the losses, of course, because Hive and Riot are down. But yeah, Equinox and Coeur Mining sort of pushing back quite nicely. Equinox in the green, 7%. That's sort of been largely about 5 to 10%, 15% in the red for a good while. So my largest position. And yeah, Himax sort of dropping down slightly. I think that sort of needs a decent semiconductor push or some, Himax specific news to get going again. But yeah, it's still 1,000% in the green. So no worries there. But we'll see how things go. Kind of waiting to sort of get a decent move on there and obviously take a bit more profit. I think the more I look, I would probably hold my Himax stock in the invest account, maybe until this sort of 2028 new TSMC partnership, the sort of silicon photonics all sort of comes to fruition. But yeah, the options end sort of January next year, so I've only got 11 months left on those, and I don't really want to be buying 2027 options because they're all just really expensive now that the stock has gone up and people are bullish on Himax. So yeah, the options are what they are, and I wouldn't be buying any more. So yeah, we'll see. I've still got 15,000 in cash. Haven't really sort of been super drawn to anything. Maybe sort of see if things pull back a little bit towards the end of the month. Might sort of deploy this cash for one last big push for towards the end of 2025. Crypto, gold, both pushing on hopefully. So we'll see. Leave your thoughts in the comments below and like and subscribe. See you soon.